She was. So, all right. Well, good morning, everybody. We are going to go ahead and jump into today's agent development training. I am broadcasting live today from Elkhart, Indiana. We got a full room of new agents. So, most of them, I'm looking across the board, most of the agents in the room were actually referred by agents within our territory. And so, thank you. If you're actively recruiting where your feet are, I think, obviously, as we continue to grow, we need a bigger army. I'll just reiterate that last year during the annual or open enrollment period, we actually, as a territory team, executed less than 1% of the ACA enrollments that actually happened in our geography. So I think sometimes people, and a lot of times people, when I first interview them or first talk to them, they say, well, you've got all these agents. What about market saturation? Is there really an opportunity? And I just say that to help demonstrate how massive the opportunity is, not just for each one of us individually, but I do think it's great. I mean, many of us have been tremendously blessed by this opportunity in this organization. And so as you bump into people, as you run into people, many times we're engaging with people who the reason they're talking to us is because they've just lost their job or they're looking to make a transition. Um, I actually ran, last week, Thursday and Friday, I was in Dallas, Texas, and we'll talk more about this maybe in a future call, but I spent 2 days with the top 7 sales leaders in the country, Dan Garrison, our president, Cliff Carthauser, my business coach, and Dallas Richens, who's in charge of our life insurance. And then 2 other TVPs were there, Steve Kirsch and Claudia Delgado. And we were just pulling together best practices from top sales teams to say, what are you doing to help new agents get up and running? And what are you doing to continue to build the culture and, the organization? And as we kind of went through that exercise, one of the things that they asked us to come into that meeting with was a breakdown of how many agents on our team came into the business with past insurance experience. I'm not going to ask you guys, but in your mind, think about, like, when you think about our team, what percentage of our team actually started with health markets and had past insurance experience? So I ran the numbers, and the number for our territory was 17%, which is really crazy when you think about it. 83% of the people that are now career agents with our organization did not come into this with past insurance experience. Now, those of you that have past insurance experience or had some level of experience coming into it, I think you've got a leg up because you've got a little bit of foundational understanding of the industry and the business. But I think it is interesting, and I think it speaks to the reality that we're just looking for great people, and we want to help them build successful practices. And you don't have to have this robust experience. You got to be willing to work hard, obviously, because this isn't an easy business. And really engage on a full-time basis, I think, to get where you want to go. But it is a big opportunity. We are actively recruiting, and it's obviously evidenced by this is the largest class of new agents that we've had this year. So welcome to all of you. Your first ADT session for most of you. Some of you not. No, Donna sat in on a few from Kevin's office. So I also wanted to thank those of you who engaged last Tuesday in our life insurance training with Dallas Richens. We had about 60, 65 agents, I think, that actually came in and we did a full day of classroom training around life insurance. I think Dallas and our carrier partners did an excellent job. We want to continue that conversation today, though, and continue to build on that. I will say, as an organization, we do an incredible job selling health insurance and selling Medicare, and then cross-selling into supplemental insurance like vision and dental and critical illness and accident, all those things. But I think, when we look across the country, we've been very focused on those products, and life insurance has kind of sat on the sidelines for many of us. Now, we sell a decent amount of life insurance, but I just think there's such a massive opportunity around enhanced life insurance sales. And I think one of the things that really struck me as I listened to Dallas and as I think about life insurance is that so many of us, when we think about life insurance, we think about it from the perspective of somebody dies, we get a payout for their family, right? Like that's what people think about when they think about it. But as you really dive into the product portfolio that we have when it comes to life insurance, there's a lot of really cool things that you can do outside of just creating a bucket of cash when somebody dies. There's some real legacy type things that you can do, but there's also a lot of cool things that you can do for someone while they're still alive. A lot of the life insurance products that we sell have a living benefit component to it. Cab's going to go more in depth on some of this, but the idea is yeah, it's there if you die, but it's also there if you're diagnosed with a critical illness or a chronic illness or a terminal illness. You can tap into it and get cash in those types of instances, right? It's also there permanent life insurance oftentimes has a cash value that you can borrow against for anything that you want. There's a whole platform out there called Be Your Own Banker, and it's building life insurance products or buying them yourself so that you build a cash value and then using that cash value and borrowing against it to do other things. It's leveraging money. Um, there's also some products that Cav will talk about where it is truly the opportunity to take a bucket of cash that you have and put it into a life insurance policy to create something much bigger, like a lump sum or a chunk of money. We have hybrid products that have long-term care components to them. So they're built in a way that if you need long-term care, nursing home, assisted living, in-home healthcare, you can pull money out of that life insurance policy to pay for those expenses. But if you don't need it for that, the benefit becomes a tax-free death benefit at the end of your life. And I will mention before I turn things over to Cav, when we look at all forms of life insurance, I think one of the biggest benefits that people forget about is that when money is passed through life insurance to someone, it's almost always done tax free. So it's a way to create tax-free wealth for future generations. I think about that personally. I've done this with a few clients over the years where I remember one gentleman in particular. He had, I think it was $50,000 set aside in his checking account for his grandkids. He had 5 grandkids, so he wanted to give them each 10 grand was kind of the idea. And as we began to talk about it, I began to kind of ask more questions. He really didn't want that money to pass to them until he passed away. So what we were able to do is we were able to create 5 separate life insurance policies with the grandkids as the beneficiaries and do a one-time lump sum dump in of 10 grand. And in those situations, I think it was close to $40,000 worth of death benefit that we created in each policy. So we took his $50,000 and turned it into almost $200,000 at the end. And if he would have given them 10 grand, there very easily could have been taxable consequences to that, where because we pushed it through life insurance, not only did they not just get 10 grand, but they got almost 40 grand and they got it completely tax free. So there's some really, really cool things that you can do with life insurance other than just cleaning up the mess when somebody dies. So again, today's conversation is kind of an extension of what we talked about with Dallas last week. I think Dallas did a nice job of laying a foundation. Steve has done a great job of diving deeper into just some of the products in our portfolio. I think many times we look at the portfolio of products that we have and we're a little bit overwhelmed. So I'll make this recording available for you guys to review as well, because Steve's going to go through some of the products that I think you should at least understand. And the way you're going to understand them is like be a student of your business and dive into the product and read the brochures and understand what it does. With all of these products, we also have carrier partners who are willing to engage with you. I mean, during business hours, you can reach them by phone. We have specific carrier partners with every major life insurance carrier that is dedicated to health markets and helping us. I had a tier 3 agent call me yesterday and she said, hey, I've got a client who's got a bucket of cash and he wants to put it into a life insurance policy and he wants $1 million death benefit, but he just wants to make a one-time premium payment. Where do I start? And I was like, I'd call the rep at Securian. I don't know where to even begin on that, but you call Securian, Dave Schroyer or Scott Gauger are 2 reps over there. They'll take your call. They'll get back to you within an hour and they'll help you like work through their product portfolio based on what you want to accomplish and find the right product and then help you build the illustrations and help you sell it. So we've got a lot of great resources there. So Cav, I'm going to turn things over to you. I'm going to stop talking. I appreciate you jumping in and putting this together for us. I know you've tweaked things a little bit in the last week or two, just as things have evolved a little bit. So you're always out ahead of everything. So the floor is yours, my friend.
All righty. All right. So again, we're going to talk about increasing life insurance sales.
Okay.
Can you guys hear me okay?
Yep, it's good. I'm going to mute though. Thank you.
All right. And so I want to talk about how to position certain products for increased life insurance sales. But before we get into that, I kind of want to talk about, when we talk about the protection for life and what we do, a lot of what we do is we talk about medical bankruptcy. And again, a lot of us know that medical bills are the #1 reason why people file bankruptcy. But a large majority of people filing medical bankruptcy actually have health insurance. And so what's causing the problems? Well, the first one is lost income. It's always lost income. That's the problem. So when 61% of Americans live paycheck to paycheck, we always talk about what's going to happen if they get sick and can't work. But we don't really focus on the implications of lost income when a primary breadwinner dies. And so by understanding that most people don't have savings, a lot of people don't have enough life insurance, it really kind of comes into what we call the three component solution at health markets, where if people want to reduce their chance of medical bankruptcy, it's all tied into number one, it starts with a good health policy to pay the doctors and hospitals. We've got the supplemental income to help replace lost income, protect savings. But there's also life insurance that we need to talk about. And I think one of the things that I have experienced talking to especially new reps and even some veteran reps is a lot of us approach this as health insurance, supplements, and life, and they're not connected. And so it creates this very awkward conversation with the customer because it's like almost, sometimes it almost feels like a bait and switch and stuff like that, where I have kind of built my whole business around this picture, being able to show where all this stuff is actually connected. And so when it comes to life insurance products, if we can show them where life insurance is actually tied into protecting them from medical bankruptcy, just like we can show them that the golden rule products are designed to help protect them from medical bankruptcy, it makes it much easier to show these products. And so what I want to talk about today is how to incorporate life insurance into the three component solution. In other words, what are some products we can talk about where it's going to make sense when we talk about medical bankruptcy and health insurance not being enough? Because I think we're all really good at that. But
Door
I think
door knob or little knobs.
Ashley needs to mute her. Silas, can you hit her?
Sorry, I must have hit the wrong button.
So again, what we want to do is we want to incorporate life insurance products where it just makes sense because it's tied into what we're talking about. And so the way I like to look at this is when we look at our fact finder, there's three different life insurance opportunities which we find on the fact finder. So on the bottom of page 3, there's a question: do you feel your family has enough life insurance? On the back on page 4, we can do the dime to determine their number, and then we can ask questions on the financial snapshot to determine additional needs like long-term care, buy-sell agreements, all this kind of stuff. But I think, again, when we look at approaching life insurance that way, it creates some obstacles. The first obstacle is most of our appointments are health appointments, and some reps are uncomfortable bringing up life insurance. Some people already have life insurance and think they're all set and they don't want to talk about it. And then people that are single don't want to talk about life insurance because they feel they don't need it. Okay. And so those are the obstacles that we need to overcome. And I think there's a strategy that if we will start using it, we can overcome all three of those obstacles. And that strategy is to present living benefit plans like Silas talked about, and I'm going to talk about a couple of them, as a critical illness plan, not as a life insurance plan. These plans are designed to provide income protection if someone has a heart attack, cancer, stroke, or if they die unexpectedly. And so by showing these products as a critical illness plan, by explaining them as income protection products, it eliminates that awkward transition into life insurance because we're not talking about paying off the house and sending the kids to college. By explaining these plans as income protection, their total amount of life insurance is irrelevant. And an example I have of that is I was working with a contractor several years ago who said, "Steve, I have 1.3 million in life insurance. I don't need this." And I said, "Well, you're a contractor. If you get cancer and you can't work for 2 or 3 months, how much of that 1.3 million can you touch?" And he said, "None of it." And I said, "Well, with this is how much you can touch." And he went ahead and took it. Okay. Now, the living benefit plan is also the best type of life insurance for a single person because it gives them access to cash if they have a critical illness. Because again, if I'm single and I have cancer and I can't work, I don't have anyone to bail me out. So these living benefit plans are great plans for single people, but there's also life insurance to take care of their final expenses so someone else doesn't have to. Because again, when someone passes away, somebody's going to have to clean up a mess. Maybe it's a brother, whatever. And it's nice that everybody has a little bit of life insurance to at least take care of the final expenses. Now, the outcome of this strategy is your life insurance sales will improve dramatically because this approach allows you to present these plans to anyone who can qualify. Secondly, you're providing better protection for your clients and you're helping the company by selling life insurance. And the third thing is you'll see a huge increase in your income because life insurance is the highest commission product we have. So let's talk about a couple of these living benefit plans. The first one is the United Healthcare Term Life Safeguard. I like to call this kind of an entry-level living benefits plan. This is the one I think everybody should learn first because it's very simple, very easy to explain. But basically how it works is it's a 10 or 20-year term where you can get anywhere from $30,000 to $200,000 in death benefit. I just basically like to deal with 30, 50, and 100 as far as a life insurance. And then the death or the critical illness is half of that. So 30, 15, 50, 25, 150. And so what this will do is obviously if someone dies unexpectedly for anything, there's money to replace income. Like I said, this is income replacement, not pay off the mortgage, send your kid to school. And then if there's a critical illness like heart attack, cancer, stroke, some other things there, they can actually get half of their life insurance while they're alive. And so the easiest way to explain this is I like to basically put it in terms of basic, enhanced, and premier. So the basic is 30,000 death benefit, 15 critical illness. The enhanced is 50, 25, and the premier is 150. And the way I explain it is pretty simple. If someone dies unexpectedly, there's 30, 50, or $100,000 of tax-free income replacement. But over the next 10 to 20 years, you're going to have a better chance of having a heart attack, cancer, stroke, and not dying. So this plan will provide 15, 25, or 50,000 of income replacement if you have a critical illness and you can't work. And then I just simply ask them, look, John, if you get cancer and you can't work for 2 or 3 months, would 15, 25, or 50,000 help you pay your bills? When they say yes, it's like, okay, which one do you want? Do you want the basic, the enhanced, and the premier? Now, I use those words on purpose because, guys, we all know people out there that they always want to buy the cheapest of everything. They have generic cereal, generic toilet paper. They just give me the cheapest. Those are the people that are the basics. Now, there's other people out there, they don't want the cheapest, but they don't need the most expensive. So those are more the enhanced people. But we also know people that got to have the best of everything. And that's where you use the word premier. And so you will have some people that will buy the premier just because it's called premier. But I just literally ask them, look, if you die unexpectedly, your beneficiary is going to get 30, 50, or 100,000 of tax-free income replacement, but you've got a better chance of having a heart attack, cancer, stroke, and not dying. So you're going to get 15, 25, or 50,000 to help pay your bills. If you got cancer, couldn't work for a month or two, would 15, 25, or 50,000 help pay your bills? Yep. Okay. Which one do you want? Do you want the basic, the enhanced, or the premier? So that's how I present this. Silas, do you have anything you want to add, or is there any questions?
I don't see any questions, and I don't really have anything to add. I think that's very well done. I think it's so simple, and I totally agree with you. This is where you start. This is not the highest commission product, but this is simplified issue. They don't have to pee in a cup. They don't have to give blood. They're really not checking a whole lot. There are some medical questions that they have to answer, so there is a qualification process, but it's simplified issue, so it's not difficult. Yes, sir.
So if you get cancer, do you get the entire amount right away, or is it like disability income, where it's a percentage of it?
It's lump sum benefits is what it is. So, and the one thing that we like about this particular one is that it is truly like the lump sum benefit that you've chosen, right, Cav? Like
Yep.
some of these living benefits, they require a life expectancy analysis to figure
And
out.
I'm going to show that soon.
Okay, he's gonna show that. This is like very fixed though. You're diagnosed with cancer, you get 15 grand. Like boom, boom.
And you still have 15,000 of life insurance and the premium goes down. So it's an entry level, it's a nice product, but it's a very unique product because I've been doing this life insurance stuff probably since about 2012 is when our company started to do life insurance. Since that time, I have never come across anybody who has a living benefit plan. Even though they've been out there forever, it's just not a very, now again, I'm eventually going to run into some, I've already got a plan like, but right now I don't see it. And it's unique because it kind of kills two birds with one stone. It's income replacement if you die, but you have a better chance of having a heart attack, cancer, stroke, and not dying because of medical technology. So this can help provide income protection, which ties into the medical bankruptcy.
Is the critical illness a one-time deal?
Yes, the critical illness is a one-time payout on the policy.
Yep.
But it is dual purpose is what it is. It's not just gonna help you if you die, it's gonna help you if you're, yeah. And you think about a lot of the people that we deal with are self-employed people. And self-employed people have a uniquely different set of issues than most people in a corporate gig or a blue collar gig, right? Most self-employed people, if they're not working, they're not making money. They don't have things like short-term disability and long-term disability and sick days and paid vacation that they can tap into. Bottom line, if they're not working, they're not making money. And so you got to keep that in mind because a large portion of the population that we serve are people who are self-employed. And I think I enjoy working with self-employed people above all others because they're like me. They have the same issues. I can speak to them in their language. They typically have money to spend. They typically have assets to protect, but they don't know but they don't have an HR department, right? They don't have somebody guiding them on this. And so we can kind of come in and do that. And these types of products really hit the mark. Now, it doesn't just have to be self-employed people, but self-employed people definitely, I think, rise to the top on that.
All right. So the next thing I want to talk about is the Mutual of Omaha Term Life Express. This is more of an advanced level living benefit plan. It does more things than the Safeguard, but it could cost a little bit more, but it provides more opportunity, but it's not as clear cut as the Term Life Safeguard. Like Silas says, you take the $30,000 benefit, you're going to get 15. This one's a little different. So again, it's just a term plan where you can go anywhere from 100 to 300,000. And this one's simplified issue as well. There's no peeing in a cup. But where the Safeguard can only go 20 years, this one can actually go 30 years. But how this living benefit plan works is there's actually 3 scenarios in which this plan can pay. The first scenario, obviously, if someone dies unexpectedly, they're going to get 100 grand. Okay, again, of tax-free income replacement. This plan is not designed, again, to pay off the house, send a kid to school, provide income for several years. Okay, it's an income protection product. So the worst case scenario is someone dies unexpectedly, 100,000 of tax-free income replacement. The second scenario is someone gets diagnosed with a terminal illness, which is less than 12 months to live. And so what you can do is you can accelerate the death benefit up to 80%, and then they're going to do an actuarial adjustment. So in this case, you would get about $76,000 tax-free. Again, still a very good option because if I get diagnosed with a terminal illness, I'm probably not working right now. And so 76 grand tax-free can help my family out if I need it. And now the third scenario is, and the most likely scenario is you're either going to get diagnosed with a critical or a chronic illness. So a chronic illness is I can't do 2 of the 6 daily activities like feed myself, bathe myself, get out of bed for 90 days. Again, if I can't get out of bed and feed myself and all that, I'm probably not going to work, okay? Or if I get diagnosed with a critical illness like heart attack, cancer, stroke, ALS, kidney failure, stuff like that, I can actually request to accelerate the benefits. And again, what they're going to do is what's called a life expectancy evaluation, where they're going to look at your condition and they're going to kind of project how much time this is going to take off your life. and they're going to kind of put it in mild, moderate, or severe. So for example, if it's a mild situation, maybe it's going to, you know, you have a 15-year life expectancy, they're going to accelerate the 80,000. Now you don't get 80,000. Again, they're going to do an actuarial adjustment, but in this case, they're willing to give you about $33,000 tax-free. So if I got cancer, if I have a heart attack and I need access to cash, this is a lot better place to access it than pulling it out of my 401k and getting taxed on it. Now, if it's a moderate or maybe an 8-year life expectancy, it's now 60,000. And if it's severe, stage 3, stage 4, now all of a sudden it's almost $66,000. And so when I look at this, is I literally could have access to cash of anywhere from $35,000 to $60,000 at a time when I need it the most. And one of the things I like to ask people at this point, especially if they have life insurance, is I'll just ask them, Silas, if you got cancer and you couldn't work for 2 or 3 months, is your current life insurance going to give you access to $30,000 to $60,000? And most people are going to say, nope. And that's what this is about. This is not about a death benefit. And that's where I see most people get messed up with the living benefit plans, is they're all wrapped up in the life insurance when you need to focus on the living benefits. Okay. So this is how I like to take in the Term Life Express quote. Again, I do the basic, the enhanced, and premier, and it's literally just 100, 200, or 300. And so if you think about the living benefits, with the 100,000, it's about 30 to 60. With the 200,000, double it. It's about 60 to 120. And the 300,000, it's 90 to 180,000. Now, I will tell you, 99% of the policies that I sell doing this are the basic. Okay. They're just, hey, just give me the basic plan. That's still a pretty good income protection plan. And so that's how I sell that. Now, then on top of it, when you throw on the GRIC quotes, I like to talk about the critical guard. Because again, what I'm saying is not to replace the GRIC plan. It's in addition to. And the way that I like to explain it when I talk about the Mutual of Omaha is, when I get to the critical guard, I'll say the reason you want to consider this plan is for 2 reasons. Number one, the GRIC, or this critical guard, pays on diagnosis. So it's almost like a short-term, long-term disability concept. You get diagnosed with cancer, we're going to give you 5 or 10 grand on diagnosis to buy you some time while they're doing the life expectancy evaluation. Second of all, if they have children, you have to be 18 to get a Term Life Express. You have to be 18 to get a Golden Rule Safeguard. So if they have kids, it's nice to do the GRIC, because you can also get the kids on there, helps with the max out of pocket. But that's how you can sell both. So Silas, I saw you came off mute. Did you have something you wanted to share?
Yeah, I just wanted to give some context because obviously the 8 people in the room are like the 2 hours into this, right? So GRIC, just for your edification, is Golden Rule Insurance Company, which is the primary supplemental insurance carrier that we sell. And so what he's doing here is he's bundling an accident policy and a critical illness policy with various amounts. So if they're hospitalized due to an accident or they're diagnosed with a critical illness, they get that lump sum cash infusion up front. And then this is kind of the secondary piece. And I totally agree with this strategy, Cab. It's how I've done it myself. I have an accident policy and a critical illness policy, much higher amounts than that. But if anybody in my family is diagnosed with cancer, for example, we get a $100,000 cash infusion within 30 days of that diagnosis. And then I built my life insurance portfolio. I have a lot of term, but I actually have $2 million of Transamerica living benefit, and I can accelerate up to 90% of that. And as a self-employed guy, I'm like, geez, if I go down and I can't work for a period of time, I've got access up to 90% of $2 million that I could pull out. Now that's one of my policies. I still have my other policies. So if I don't survive, the family's going to be taken care of. So a lot of times when we're building life insurance solutions for people, it might be a couple of different types and kinds of policies to address different issues and different needs, right? So, and a lot of times, you know, when we're working with folks, you got to kind of think through, what are we trying to accomplish here? Oftentimes there is that income replacement piece, but then you can feather in maybe a small living benefit policy. And then maybe like for me, I also have about $500,000 of permanent life insurance that goes forever. So eventually my terms will fall away, but I'll still have something later in life to give my wife some breathing room so she doesn't have to liquidate assets at a fire sale rate if I pass. So you can kind of layer policies too. And I think once you start getting in these conversations with people about life insurance, oftentimes that's what you're doing. I've got many clients where I sold them one policy, maybe just a term to get started, and then we started layering other things on top of that over time to solve different problems for them, right? So that's all I had, Cav.
All right. So what I want to do is I want to compare just doing the critical guard with the UHC safeguard. And so this is a 42-year-old male in Indiana. We do a 25,000 critical illness plan. There's 12,500 for chronic illness. There's no death benefit. The premium's $19.16. So as a tier 1 agent, I'm going to get advanced about $46 on that, and I'm going to get 178 FYCRs. Now, what if we did a safeguard 20-year? You still got the 25,000. There's really no chronic illness built into that. You've got a $50,000 death benefit. Now the premium is about $30 more, and the reason it's $30 more is you're getting more benefit out of this. You're getting life insurance in addition to. But the advance on that is $258, and the FYCRs are $979. So again, it's just a situation where if I will kind of maybe transition to the safeguard as being kind of my go-to critical illness plan, I can always add the critical guard in the background. Same thing. Hey, you might want to get the safeguard for income protection. Let's do the 5,000 or 10,000 critical guard to help pay your max out of pocket and make sure your kids are covered. So you can do both with both products. But if we take the same thing on the safeguard, and now we compare it to a Mutual Term Life Express 30-year, now your critical illness is 30 to 60,000. Your chronic illness is 30 to 60,000. You got $100,000 in death benefit. It's $7 more. Your advance is $399, and your FYCRs are $1,066. And I know the people in the room with you, Silas, don't understand any of this, but I think they understand 400's more than 257 in pay, right? And so that's why if we want to kind of provide our customers with better protection and get paid a little better, the Mutual Term Life Express is a great alternative if you're comfortable selling the safeguard. That is the starter point. So for the new people, get comfortable there. And if you never leave that product, you're going to be fine. But if some of you who are on the call who are a little bit more seasoned in this and you want to kind of accelerate this a little bit, the Mutual of Omaha Term Life Express is a great product. Matter of fact, it's what Dallas Richens said, the top offices in the country that are blowing our doors out of the water, they don't even have the GRIC product. They're selling the Mutual of Omaha Term Life Express. That is their main product. And they're emphasizing the living benefits, and they're selling. I think he said the average premium was like 250,000. So, you do that 100, 200, 300. When people see that, they'd be willing to take that for their own income protection. Now, what's possible with these programs? Let's just say I average one safeguard sale a week with an average premium of $50. As a tier 1 agent, that's about $13,000 in advance, and I'm almost tier 2 just by averaging one of these a week. Tier 2, it's 15,000, 58,000. Tier 3, almost 17,000, 63. And tier 4, like myself, Silas, it's 17,000, 67,000 on just one $50 safeguard plan a week. Okay. Now we go do the same thing with the Mutual of Omaha. It's over 17,000 in advance for tier 1. It's a little less than FYCRs because the safeguard is 2.85. The Term Life Express is 2. A lot of you know what that means. The new people, you don't need to know what that means right now. But here's the bottom line, 17,000, I'd rather lose a little FYCRs and make $5,000 more if I'm selling the same premium, okay? And again, for a tier 4, I mean, it's 107% advance. So
I want to explain that. So with these life insurance companies, what that means 107%, that means whatever the client pays in premium in the first year, the insurance company is going to pay you 107% of that. They're going to pay you more in commissions than what the client paid. Now, there's not a trail on this or anything, but basically the insurance company is saying we're going to give you more than what they're going to pay in the first year as your commission to get this business on the books. And then the insurance company makes their money on year 2, 3, 4, and beyond, right? So it is interesting. And when Cav talks about life insurance being our highest commission product, when you start looking at, 56% to 107%, that's of what the client pays in the first year. That's what we're getting as a commission. And that's correct.
One time, but
Yep.
and then we get a 9-month advance.
FYCR.
FYCR is first year commissions rewarded. So it's a way for us to measure things within our system where whatever every product we sell, there's first year commissions that are calculated off of that, and then we weight those accordingly. And we'll talk about that a little bit later today
No receipt.
on life insurance, on these life insurance products. They're the only products in our portfolio that don't have a residual income, but a huge upfront commission, right?
Yep, cash flow is what this is. So that's the living benefit. Now, the next plan I want to talk about is the Transamerica Super Term with the income protection option. And the whole idea here is now where I'm transitioning in to help people get what they need to pay off the mortgage, send their kid to school. This is a death benefit that's designed to take over if the primary breadwinner dies long term. So again, the living benefit plans, income protection product. This Transamerica income protection, this is the life insurance that they're going to want to put together. And so here's my transition into life insurance if they have dependents. Because if I'm talking to a single person, the living benefit plan is what I'm going to sell them as their life insurance. But if I'm talking to a husband and a wife, there's kids, stuff like that, kind of the way that I position it is after I get done doing the health and the subs. Now, before I go, there's one last thing we need to discuss, and that's your life insurance situation. Why? Because I've already shown them the 3-component solution, and life insurance is one of the reasons why people file medical bankruptcy. And then I say, we don't have time to do anything about it today, but I want to learn to see if you have enough life insurance in the right type. And then I ask the questions on the bottom of page 3 of the fact finder. I know who the primary breadwinner is because I've already done their income on the ACA application. So it's just, John, how much do you have any life insurance? How much? Mary, how much life insurance do you have? Is it term or permanent? Is it through an employer? And then when I get done asking those questions, I'm like, one more thing. Do you have the old type or the new type? And usually I get a deer in the headlights look or what do you mean? And then I say, let me show you. And then I do the Transamerica Income Protection. They have a little brochure that I kind of take people through. And it just basically is many people who receive large sums of money spend most, if not all, their funds within a few years. It's one of the reasons why this income protection option was created. Because think of people who win the lottery, they get a big inheritance, they get a big life insurance. Most people blow it because they don't know how to handle large lump sums. And so the nice thing about the income protection option is the policy owner can actually design this plan to pay it out over time. Okay, so here's how it works. They basically design it on, first of all, there's going to be an initial lump sum to cover funeral, help pay off the house, pay off on any debts. And then there's a guaranteed monthly income from anywhere from 5 to 25 years to ensure that the money will last. I mean, think about this. If you're leaving your life insurance to a 20-year-old daughter, if you leave her $500,000, she's going to go buy a Jaguar and tour the world. But if I can give her a monthly stipend, or if I'm leaving this to my wife and I can leave her my paycheck, so even though I'm not here physically, I'm still here financially, it's going to really help out. It provides security. And then at the end, you can do a final lump sum benefit where you can like leave another big amount, which maybe the wife can take and drop it in an annuity and have lifetime income. Okay. So an example of how this works is these people built $1 million life insurance policy. So 250,000 up front, 3,000 a month for 15 years, and then 250 at the end. So the total payout was $1 million, but because it was spread out over time, he only needed $900,000 in death benefit. So I can get more payout for less money because I'm spreading it out over time. And so once I get done explaining that, I just ask them, would you be interested in a plan like this if it worked for your budget? If they say, yeah, okay, let me gather some information so I can run some numbers for you. And the income protection, they actually have their own need sheet that you can use where you just put in their final expenses, pay off the house, other debt. That gives you your lump sum. If you're totally out of debt, how much money do you need to survive? How long do you want that for? And then do you want a lump sum at the end for something else? And in this particular case, it came out to 490,000. So 150 up front, 4,000 a month for 5 years was 240,000, and then 100,000 at the end. So once you build that, all right, when would be a good time to get back together to review your options? And then I go to Transamerica. You don't do this on Quote Connect, you do it on Transamerica, and you just print out the illustration where I just show them. This is your number. This is what you told me you needed. 150,000 at lump sum at death, 4,000 a month for 5 years, and then 100,000 at the end of 5 years. So guys, that comes out to 490,000 in death benefit, but it's only 469. And this is how I close these plans all the time. I look at the wife and I say, now, if John passes away unexpectedly, do you want 490,000 in a lump sum, or would you rather have it like this? And I will tell you 99.999% of the time, they're going to say, I want this, which means John's going to have to buy something, isn't he, if he wants to stay married? Because women want security. They don't want to have to go to Edward Jones with $500,000 and figure out what to do with it. They want stability. And this is an income protection product, which ties right into our medical bankruptcy. And so then all I do is I just ask John, okay, how long do you want this for? 10, 15, 20, 25, or 30 years? Here's the premiums. She wants it. How long do you want it on you? And so let's say he says 25 years because he's 42 years old. I always try to get people as close to 70 because this plan you can convert up to age 70, and we're not going into conversion right now. But let's say he takes the 8831. As a tier 1 agent, that's a $485 advance, $1,200 up to a tier 4, which is $678 and $1,800. So again, it's just one of these things that you can use to really help get them their number, protect their income, but you're doing it with a product they've never seen before. Again, I've never seen anybody with a Transamerica plan. I've come across people with Transamerica, they've never had the income protection option. And there's not very many other companies. I think Securian has a type of payout like this, but nothing as customizable as Transamerica. So any questions on this before I jump into a few final expense products to round us out? Is there anything in the chat, or Silas, do you have anything to add?
Nothing in the chat. I will say though, you start looking at that, an $88 monthly premium. As a tier 1 agent, you're going to make $485 up front. Basically what that is that advance is 9 months, right, Cav? Is that 9 months?
Mm-hmm.
9 months worth of commissions up front. And then if they keep that policy for the course of the full first year, you're going to actually make $650 on that. You start thinking as a new agent getting started in the business, could you find one person a week? That creates some pretty significant cash flow right out of the gate, right? On one sale a week.
Now, what if you sold a living benefit and one of these? Do you realize how fast you can grow your income and grow your FYCRs to start hitting these other tiers? I mean, that's why we got to incorporate life insurance in what we do in so many different ways.
We have a question in the room. Susie actually has a question. Kevin's mom's here, so she's got a question.
What happens if the beneficiary dies before the full?
So Cav, I'll let you take that. What if the beneficiary dies before the full payout happens?
Well, they can have contingency beneficiaries, or the whole thing, whatever's left is going to go towards their estate.
So he gets paid out no matter what.
Yeah.
Just a matter of dictating your beneficiaries or having a contingent beneficiary is a good idea. But it'll pay out no matter what. It's just when you put the beneficiaries on it, you get to pick where it goes, right? You have a little bit more direction.
Yep. So you could set it up to where if my wife dies, then I want this to just transfer to my kids and it's just going to stay. But if there's no contingent and the beneficiary's not there, it's just going to be clumped into, this is what you have left, goes to your estate. So yeah, you don't lose anything if you die.
So can I be the owner of a policy on my mother and make myself the beneficiary? Because
That's a good question for Justin at Transamerica.
I was just kind of teasing there with my
Because
mom.
I know
Well,
you can, especially when it comes to kids and stuff. You can be the owner and the beneficiary, but I don't know if they would kind of frown on that if
So
it's
there has to be what's called insurable interest. Like
right.
I can't just insure one of you guys, be the owner, the beneficiary, and say, hey, Gavin dies, I get paid. There's got to be some sort of insurable interest there. Now, yeah. Since she's a key employee of yours now, that might be a legitimate insurable interest here.
It could
Well,
be. Yeah.
yeah, don't tell her she's a key employee just yet.
We already set
All
the
right.
stage for that, my friend.
All right, so let's kind of finish up on some final expense options. Again, this is more geared towards when you start getting into the senior market and stuff, but I do want to just touch on a few just to kind of whet your appetite. And the first thing I want to talk about is the Mutual of Omaha Children's Whole Life. I like this plan more than Securian for a couple of reasons. First of all, their brochure has everything you need in it, so you don't even need to go online to do this if you want to quote. But what this plan does for kids is, first of all, it does two things. Obviously, it's a child's or it's a parent's worst nightmare if they ever have to bury a kid. And if I'm touching anything where that happened, I don't mean to, but it is a possibility. So there could be final expenses. But what this plan's really going to do is it's going to help protect the child's future insurability. And so what I mean by that is once they get into this plan, when they hit between like 20 and 30 or 22 and 32, there's going to be life events where Mutual of Omaha is going to send them a letter and say, hey, do you want to increase your life insurance by this amount? And there's no health questions. Now, the reason this is such a big deal is some of you know the story of my nephew, Liam. My niece, Emily, had me come write life insurance on Liam when he was about 9 years old. They just, hey, that's a good idea to have life insurance on everybody just in case. Well, then a few years later, Liam got really, really sick. He almost died and found out he was a type 1 diabetic. Well, now he's uninsurable on life insurance. Unless things change, he's uninsurable. But because he's on a plan like this, he's going to be able to get more life insurance when he gets in his 20s and 30s if he wants to, with no health questions. And so not only are we protecting ourselves as parents for the worst case scenario, we're also protecting our kids' insurability if they get type 1 diabetic, autistic, leukemia. I mean, kids get cancer, stuff like that. And then the beautiful thing about it is, right in their brochure, they've got the rates. So you can just show them the book and say, okay, you've got a 5-year-old, 10,000's $5, 50,000's 23, and that's the price it's going to be for the rest of their life. Now, obviously, if they decide to take on more, that creates a whole new product, which means we get paid first-year commissions on things we don't even have to deal with. Okay. And so I really like this for a couple of reasons. First of all, Securian has a plan like this where you can do 25,000 and then when they hit 18, it'll go up to 50,000 without a change in premium. This one you can start at 50,000 and it's just going to be there, so it's there. Second of all, this one has a little bit higher commission than Securian. I'm a salesperson, get paid on commission. That's important. But the third thing is when you do the application, you can do up to 8 people on one application. So if you have a family of 3 and you want to do all 3 kids, I, as the owner, can do one policy, have all 3 of my kids in that policy, and it's one and done. So that I don't even know if Securian does that, but I just thought it was cool that they did. And so when you look at this, if someone took the 23 bucks, 50,000 for a 5-year-old, again, 117 bucks is a tier 1. I mean, that's worth just asking the parents, hey, do you have life insurance for your kids? No? Well, let me show you this real quick. I mean, worst thing they're going to say is no, we don't want it. Or if you've talking to grandparents a lot of times will put on the Gerber plan and stuff like this. So again, if you're talking to grandparents and they have grandchildren, show them this. My God, if you could start tacking on 2 or 3 of these a week, just because you're just meeting with people, again, it'll increase your income. Now, another thing I want to talk about is the Transamerica Final Express Solutions. This is helping seniors with burial coverage and Social Security replacement. I'm going to show you something here. So burial, it's pretty obvious. If you're talking to someone and they don't have anything, get them something for the funeral. But a lot of times you may come across people who say, I've already got my funeral paid for, whatever. And a way that you can still sell this is actually talking about Social Security income replacement. And this is a little worksheet that I got from Cigna where you can actually just put it, it's a little fact finder where you can put the information in and show them, because a lot of people, that if there's a husband and a wife and they're on Social Security and they're on a little pension, a lot of them don't realize that when one of them dies, the lowest number's going away. The pension may be going away. And so you can sell this product kind of as a, let's replace the lowest number for a year just so you can learn to live without your spouse on the same income. Okay. So it's something that works. And so the cool thing about the Transamerica Final Express is they actually have a pre-qualification assessment where you can go and ask a bunch of questions and it'll tell you exactly what to quote on this if they qualify. And this is one of the most lenient underwriting plans I've ever seen. And so there's a couple ways to quote it. Number one, you can quote for premium. In other words, I want 10,000, what's that going to cost? The other way you can quote, which is the way I like to do it, is tell me how much money can you afford to take care of something like this? 50 bucks? Okay, that'll get you 7,932. Because guys, if they tell you I can afford 50 bucks, you just made a sale. Because that's what 50 bucks is going to get them. Okay. The other neat thing about this plan is, let's say someone just says they want 10,000. You do the application. At the end, it'll actually tell them you qualify for up to 50,000, and you can actually upsell right there without having to do anything else. You just say, I want to do 15 instead. So that's a cool way to do it. But again, why would you want to do this? This plan is the largest commission product we have in our portfolio. It's 79% for a tier 1. So if I sold someone a $62 policy, again, 443, 1100, 110% for tier 4. So you got 110% for Transamerica, 107 for the Term Life Express. Again, if I just go out and I just sell one of these a week, again, I am tier 2 if I, just selling one of these. And so these are products that as you start working with the senior market or people that are retiring and maybe they lose their group insurance, but they're like 62, 63, this is a great product to fill in that gap. Now, the reason I like Transamerica is when you get done with the application, they will tell you yes or no right then and there. Well, if I get someone who's declined, and now all of a sudden the fear of not being able to get anything comes in, I can immediately transition over to Ethos, which has a guaranteed issue final expense. It's our only guaranteed issue life insurance product. And I can just go in and say, hey, I'm sorry you didn't get the 10,000, but I can get you this 10,000 instead of 60 bucks. It's going to cost you 93, but I can get you coverage. Do you want it? Yes or no? And then again, if I turn around and sell this, it's still a pretty good advance for someone who just lost the ability to get insurance. Okay. So one last thing, and then we'll wrap it up. And it's the security and secure legacy. And this is how you can protect or transfer assets to the ones you love. And this plan's designed for those people like Silas talked about. I got 50,000, I want to leave. You know, or the people say, I've got money in the bank for my funeral. Well, the nice thing about this plan is it's a one-time lump sum. They're not spending any money, they're transferring assets, and it's going to give them more of a payout over time. And so this is an example of a 60-year-old who had $50,000. He put it in annuity for 20 years. It grew to 109,000, but when he died, there was almost 20,000 in taxes. So even though it grew to 109,000, his kids only got 89,000. Where if he would have taken that same 50,000 and dumped it into the secure legacy, it would have given him 110,000 in death benefit, and then when he died, his kids would have got 110,000 with no tax benefits. That's what Silas was talking about earlier. It's transferring wealth with no tax consequences. And so literally when you pop it in here, you just put in the 10,000, it immediately makes the death benefit higher, and then it just starts growing. So again, it works just like a CD or anything else. So if these people ever need this money, they can take policy loans against it. They can surrender against it. But it's one of those things, if people have idle money that's just earmarked towards their kids or earmarked towards a funeral, it would make sense just to pop it in here and make that money grow. Because with this plan, the single premium, again, there's a immediate death benefit. Annuity, there's no, and interest-bearing accounts, it's not immediate. Avoids probate, yes, no, no. Tax-free, yes, no, no. Access to money, yes, across the board. So when you've got people and you can kind of show them this, again, it's for people with idle money. I just have this money sitting that I want to earmark towards this, or I have my funeral, I can pay for my funeral. It's a great way to leverage this to get them more cash. And then how this plan pays, it's just a percentage. So if you put in 10,000, if you're tier 1, you're going to get $407. It's just a one-time, you get your earnings right up front. You get some FYCRs. But again, this is not going to be for everybody. But if you've got some wealthier people that got some money set aside, or you're talking to people about their funeral and they're like, well, I've got money saved for that. I just ask them, can I show you something? And I just pop it in there and show them how they can make more money for the money they already have sitting in the bank. So
And in that scenario,
Silas.
yeah, in that scenario, I mean, if you go back to that illustration, one slide back, you put in 10 grand and instantly had 19,643 death benefit. So you're almost
each year it's
double
growing.
your money immediately, right?
Yeah.
So, yeah.
Yep.
So there was a lot here, Cab. You worked through your way through a lot. For those of you in the room, this is a sampling, right? This is where you can wade into this over time. This is not something, but I think the bigger idea here is that life insurance can be used for so many different things, right? It's not just to create a death benefit. And so starting to understand some of these, I'd tell you, you don't have to learn all these. You don't have to know all of them. We talked about starting with the term life safeguard. I think that's the right place to start. Get a couple of sales under your belt and then kind of figure out what what trips your trigger? What do you have a little bit of a passion about? What excites you? Because if it excites you, you're going to do a better job explaining it to clients or prospective clients as well. So,
yeah, I always like to just show the products that are income protection, because it fits with our P4L presentation. So any living benefit, the Transamerica income protection option, and just the kids' life insurance. If you just learned the living benefit, the Transamerican protection, and kids, and that's all you learned, you can make a boatload of money and help a lot of people with life insurance and not even worry about the other stuff.
and I would just challenge those of you on the call who have some experience under your belt, like just start putting some quotes together for some of these products and carry them in on your next appointment. Show them in your next client meeting. I mean, I would say 99% of the reason people don't sell life insurance is they don't show it. So just taking 5 or 10 minutes ahead of time to run the quotes and put them in either Quote Connect or, one of the quoting engines with the carriers, and just take it in and show them what it does. See if they want it.
Yeah, and I really think, guys, if you want to sell life insurance, it really has to become a strategy. It's not something that's just going to organically happen. You have to have a strategy on how you're going to position these products. And some people are not going to take advantage of it, but it doesn't take very many that will to really increase your income. And with some of these products, you are really helping these people so much more than, and this is why I like living benefits. And then I know we got to cut off Silas, but 99% of term plans never pay a death benefit because people outlive the term. If I'm going to spend my money on something, I want to spend my money on something that I have half a chance of using. That's why I'm a big believer in living benefit plans, because there's a chance I may need it versus just having a term life plan that I just outlive. So
Yep.
that's all I got.
Heather asked, so for those of you in the room, protection for life is an internal terminology that we use, but it's really our positioning statement. And a positioning statement is who are you, who's your company, what are the things a client should think about. And so Heather, the P for L really does encompass health insurance, supplemental insurance, and life insurance. It's more of a positioning statement to position those. So we don't have like a positioning statement specifically for life insurance necessarily. I think that protection for life should be opening the door and the opportunity to have the conversation. I think, it should initiate the conversation, but there's not like a secondary presentation, another positioning statement that we have around life insurance. So that's something, figure out what products you want to present and maybe build a little bit of a presentation around that would be what I'd advise.
Yeah, I would just tie it into people dying unexpectedly is one of the reasons why people file medical bankruptcy, because most people, when they buy their life insurance, they pick a number out of the air and 200,000 is plenty. It may be, it may not. They just don't do needs analysis where, that's do the dime on the back of the fact finder, use the one that Transamerica with the income protection. But the main thing is you just want to let people know is we got to talk about what you got and we got to see if you have enough. And then here's how we can fill in the gaps.
Yep. So McIntyre, you're the other tier 4 agent on the call, I think, as I'm looking across everything. You got anything to add to this conversation?
Nope, this is great. Thank you. It's always great to do an overview and to get it down to a few products you can really focus in on, as opposed to trying to be a master of all of these. So thank you, Steve.
You're welcome.
Well done,
And you're
Chad.
one of the people I referenced, Kevin, because I remember a conversation we had where you were like, I'm uncomfortable talking about life insurance. So I incorporated you in the presentation. Thank you.
Hey, you're welcome. If I can give you any other material, just let me know.
Well, hey, everybody, I appreciate you being here today. We'll get out the recording to this so you can kind of comb back through these products and, hone in on what you want to understand. And I just encourage you, be a student of your business. Go sell some life insurance this week. So good luck with that. If you need anything, don't hesitate to reach out. Thanks for being here today. See ya.